Good morning, everybody. Hope y'all are doing well in the garden again this morning, and drinking my coffee. Wanted to talk about, this won't be a long video, but I just want to give some transparency on what I am investing in the latter half of 2022. All right, so recently we've talked about kind of there being uncertain times and inflation and just a lot of movement and uncertainty, right? And that has adjusted minimally, but it has adjusted what I am investing in and what I'm allocating my money towards. So to start, the biggest thing that I'm doing is making sure that I have no recurring debts at all, right? So I'm being hyper focused on paying off all those balances on the cards every month that my wife and I use for whatever, entertainment and groceries and what have you, right? I'm being super diligent that those have zero balances at the end of each month. The reason being, in uncertain times, I definitely don't want high interest debt that I would have to pay on and that would accumulate, I guess I could say. So that's been kind of my number one. Absolutely. In addition, I am increasing my emergency fund, like I talked about in the previous video. So we had and it's kind of been interesting this year. I've been kind of in, I guess, maintenance mode, or I haven't made as much traction this year with my investing and savings as I did last year. We had a couple large expenses, one of which was some electrical work we had to get done on the house, which was several thousands of dollars. We'll just say that. That kind of wiped out some of the reserves that I had in place. And so I've been in the mode of building that back up as fast as possible. Right? So instead of money that I would have put into ETFs and index funds last year when the emergency fund was already in place, that money is going into my emergency fund. Not only have I recouped that emergency fund, but I am also increasing the amount that I am going to have there. So instead of 3 to 6 months, I'm going to push towards 6 to 8, maybe even 8 to 12. Because again, in uncertain times, it's kind of nice to have a little cash in case something happens. I also think it's wise, just in my personal situation with family and me being the sole provider financially, to have that in place. So that's something where a lot of my money is going. Also, I have small amounts. Well, okay, so 401k. 401k is a pretty decent amount, actually. And I invest a pretty large percentage of my income into my 401k, which also has an employer match, which is nice. So I'm continuing to do that, and that is invested into a myriad of things: mutual funds, international funds, bonds. It's a mix of things, right? One of those target date funds is what I basically have set up. So I continue to do that on a regular basis. That has not changed. In fact, last year the percentage of my income that I invested into my 401k was lower than what I've done this year. So I increased that percentage this year. I have decreased the percentage of money that I'm investing into my taxable brokerage account, although I still continue to do so. Right? So outside of my 401k, I invest into taxable brokerage account. And I won't put a plug. Y'all know, if you've been around my channel for any amount of time, that I'm a big fan of Acorns. I think it's great, not only for the roundup feature, which I actually don't even use. And for those of you that don't know, the roundup feature is when you connect a card basically to your account. Whenever you swipe it, say it's for $1.75, it'll round it up to the nearest dollar, so that 25 cents, and it would invest it into an investment account that you get to pick. And they have pre-built ones all the way from moderate to aggressive, and I think 3 steps in between. They also have, and I do not personally use that feature. I use it mainly for recurring investing. So I have an investment, a small amount that goes in every Friday, right? It's kind of like the ultimate dollar cost averaging. And it's an amount that I don't really notice that's gone, right? So it's not like I'm investing $500 every Friday or something like that. It's a small amount, but it accumulates over the months and over the years to be something decent. And it makes sure that I'm getting in the market consistently, where I don't even have to think about it. And again, it's the ultimate dollar cost average. So I continue to do that. I also have a Roth IRA account that I do the same thing with. Outside of those small portions that I'm investing into those accounts, and what are those accounts made of? Well, primarily ETFs and index funds. Small amount of bonds, and that's my dog. Small amount of bonds are in there, some international funds, but the majority are some typical ETFs and index funds that follow major indexes like the S&P 500, right? Outside of those small portions, the $20, $30, $40, $50 kind of recurring investments that I put in, I also, on months that I have monthly margin or months where maybe I get a little bit more money than other months, I throw into an index fund or an ETF. So I'll either throw it into my Acorns account, or I have an M1 Finance account that's more dividend focused that I'll throw money in there. So yeah, that's been that's kind of what my strategy's been. I do have some cryptocurrency, very, very small position that I bought last year that is obviously down this year quite a bit, probably half, to be honest with you, but I'm not selling it, right? So I'm not adding funds into that at this point. Excuse me. Might be a smart thing to add it because the market's very down, and I don't fully know, and this is why I haven't really allocated much money to it. I don't know what my stance is fully on the future of cryptocurrency, and maybe that's a video in and of itself, but I'm not educated enough. I don't have the foresight, the expert foresight to predict what that's going to do. I certainly think that there could be a chance that most cryptocurrencies maybe go away. Maybe there's only a few. I think there's a chance that it could hover kind of where it's at for several years, in a lower position, at a lower value that it's at now. I think there's an opportunity that it bounces back quickly. I can kind of see a scenario where everything happens. I don't think it's going to bounce back super quickly. If I had to give a prediction, I think that it will be a slow rise. I think that there'll be some things that have to happen over time, over maybe the course of a year, for it to kind of recoup some of the value that it's lost. But all that being said, I don't throw money in there. I used to throw 2 to 5% of my monthly margin, the money after all of my expenses, into cryptocurrency. I don't really do that anymore, and I haven't done that probably for a few months, I would say. So cryptocurrency, yes, is part of my portfolio, but again, a very, 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 very small position. So what am I focusing on in the future for later this year? I'm going to continue my plan, again, that building up my emergency fund and continue investing in those ETFs and index funds is kind of my bread and butter. I plan on continuing investing into my 401k as I have been this year. I had set a dollar amount goal for myself for the year, and so I want to achieve that for my retirement accounts. But what am I looking for maybe later this year? Well, I personally think there's going to be an opportunity with real estate. I've been watching a lot of videos on, is real estate going to tank, or with these interest rates, is it just going to slow the market down? Are home values going to stay consistent? Are they going to increase slower? Are they going to decrease? And there are certainly very well-educated people out there that have very, very different ideas, very different theories, which makes it hard to predict what it's going to do. When you have very smart people that are predicting opposite things, it makes it difficult to navigate. So basically, I'm kind of a real estate geek. I really like it. I like seeing what the market's doing. I like looking at homes. It's just kind of, I guess, who I am. So if I had to guess, I could certainly see a scenario where real estate does, the values do decrease. I can see a scenario where maybe foreclosures increase, depending on the economic situation, especially with rising interest rates and inflation. I can very easily see a situation where people are not going to be buying homes because they are more cash strapped, because of inflation, because the cost of goods are going up, because interest rates are going up, which makes a huge, huge difference when buying real estate. So I can see those individuals not buying homes. I can see a situation where individuals that bought homes over the past 3 years at a very low interest rate, and maybe bought too much house, right, too expensive, can no longer afford their house because the cost of goods are increasing, that have to get rid of it quickly. What does that mean? When there's somebody that needs to get rid of something quickly, oftentimes there's an opportunity to buy at a discount. Those individuals probably won't be able to get the price that they would have a few years ago or even a year ago, that they would when they have to sell quickly, because the buyer market has shrunk. And we've seen that. I've read multiple articles where the mortgages taken out and the refinances happening have decreased significantly over the past few months with rising interest rates. So those people that are looking to buy their home, while still in my market, which I'm in the Midwest, still in my market, houses are selling quickly, but they certainly aren't selling as quickly, and they certainly aren't selling, you're not getting 20 offers in 12 hours for 40, 50, $70,000 over asking like you were. So we can already see that slowing down. I also think foreclosures, like I said, will increase due to people buying too much house, not being able to pay it, maybe not being able to sell it for what they bought it for, and having to foreclose. Okay, so what does that mean? Well, I think there will be an opportunity at some point, and I don't know what that point is, to buy real estate at a discount. So it would be nice, in my head, it would be nice to have some money in reserves to have a down payment to purchase another property, in addition to the one I have now. I've toyed around with the idea over the past year or two of buying another property, moving into that, and then renting out the one that we have. So that's kind of what I'm thinking. I'm kind of battening down the hatches on the spending to hopefully have the opportunity to get a deal on something like real estate, like a house, here in the near future. So we'll see. That's kind of a stretch goal for me. We don't have a ton in cash reserves. We work on that, but I certainly don't have enough, I should say, to purchase a home with cash. So that's something that I'm working toward. So yeah, I guess to recap, I'm working on the emergency fund, working on having those cash reserves. I'm staying steady with my 401k and retirement investing. I am investing in my ETFs and index funds, as I have been, just not as aggressively, because a lot of that money is going toward rebuilding and increasing the emergency fund after the home expenses that I had previously. And yeah, my stretch goal, I guess, is to maybe have the opportunity to buy a piece of real estate at a really big discount, and even renovate that a little bit and build some equity into that pretty quickly for when the market does kind of recover and people are buying homes a little bit more. That would be a good opportunity for myself and any investor. So if you have any questions, love for you to comment below. If you have anything that you're investing in that even is different maybe than previous years, I'd love to hear about that. Not only for the comment, but for education on my end. I'd love to dialogue with you about that. So hope y'all are doing well. I'm going to get after some yard work today and spend some time with the fam, but hope you guys are doing well, and we'll talk to you soon.